Hello, today's June 29th, 2016. We're going to take a look at the S&P. Market's in a neutral digestion with sentiment above the market, and we've got a strategy opportunity to fade this rise. We've been looking at the long-term structure, so here's the monthly price map structure for June, and we've rallied above the monthly R level, and today's R level is coming in at 2056.75, so we're having this kind of a squeeze above here into the daily sentiment level. And at the same time, here's the VIX monthly at 05, and it's breaking down to the daily sentiment at 1770. So we have this confluence here where the VIX is pressing its extreme to the lower on the downside and the S&P to the upside. So if the S&P is really going to transition higher, it's going to need to get above 2056.75, and we would anticipate that the VIX would fail here from 1770. However, if the VIX does stabilize here and we get a little reversal and a pop back above 1905, that's going to be the trigger that this is just one big squeeze, and this pressure would be anticipated to resume. So here's an intraday chart, and we can see the market has been linear all day, so this is a dangerous thing to fade, even though it is one of our optimal strategies to fade this area. We also have a breakout above there, which all coincides with what's happening on the bigger picture as well. I've drawn in a structure point here at 2051.75. That's really the breaking point. We need to see this market break some of this aggressive buying structure before we want to think about fading this momentum. If we get a break in structure, that's going to be the tell that this aggressive buying is over, and then if we price qualify back below the upside pivot, that's going to be the reversal that says, okay, we're on our way to return to that negative momentum, and we could even leverage that up below the directional. If this aggressive buying continues and this maintains this positive aggressive structure, we'd anticipate the market to just continue to roll like this right into the close, maybe coming up to the 2068 level in the S&P, but it would have further gains expected up to 2090.50, just because we'd be breaking out of this upside pivot, and that would be a 2-way PMD move, and that would be in line with this hedge strategy theme. So the key right now is structure. As long as this market is holding positive structure, that's the story. We're sticking to it. It's a railroad. If we do get a break in structure, things could get a little exciting, and we could get a revert to that negative momentum. Any questions? Feel free to email me at info@jsservices.com. Good luck.